G'day, welcome to this week's video. This week, talking about something that I haven't known for the past 26 years, and it's been one of those annoying things in this industry where I'd like to invest for children that are under age 18. Grandparents would like to do that, parents would like to do that, but it's very difficult to do it and do it in their individual names. You could go down the track of investing into insurance bonds or investment bonds. They're great, but they're expensive. They're taxed at 30% within the bond itself, so they're not tax-free. And if you want to go and buy a particular stock at a listed investment company or Microsoft or something like that, you've got to be 18 to open an account, so it's really difficult. Then there's the tax rates that once you earn over $416 in income, all the way up to about $1,307, you're going to be taxed at 66% on the income you've earned. So that's a really crappy deal. Anything above $1,307 is going to be taxed at 45%, the top marginal tax rate. So the government has stopped, obviously, parents investing heavily into their children's names and using them as, obviously, tax mitigation. So that's why those rules are there. But after 26 years, both Ash and Amy have done some awesome research, and they have found that they can use what they call not a dividend reinvestment, but it's a dividend substitution plan. So you, instead of receiving the dividends, you can receive extra shares, and the money that's used to buy those shares is not included in a person's taxable income for that year. Yes, on the sale of those shares, there is tax implications, but there's no tax implications on an ongoing basis. So those for very high marginal tax rates, they're helpful. And for children, fantastic. That they can, it can be still difficult to get them into their individual names, but there's the opportunity where you might buy them in the grandfather's or dad's name and then transfer the shares out into the minor's name, and obviously there's no tax implications. So a good result. It's taken 26 years to find this result. It's been here about, I think, since probably the last 10, 11 years, but it seems to be with the listed investment companies like AFIC, like Argo, Durawarra and so on. Whitefield is in there as well. So do your research. These are great diversified businesses with lots of exposure to lots of different companies, and that's what you want where you're starting off in small investment, which is usually the case for when we're investing on behalf of our children and grandchildren. Thank you for listening. Please seek advice from your financial advisor and also your accountant on this one. It is general advice only. If you've got any questions or a topic you'd like us to cover, please let us know. Cheers.